Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies' SOFI stock price and why it has surged by around 20% today. We're going to be going over the latest stock news for SoFi Technologies and why this particular author thinks that we should wait for this approaching catalyst before we buy more SoFi stock. The author is also going to talk about if the SoFi stock has actually found a bottom and why the overall stock market as well as the SOFI stock price is surging right now, because if the company has not found a bottom, it means that it's going to increase in price temporarily just to fall even more as time goes on. So we're going to be going over the pros and cons of that, the latest news updates, what the recent price targets are for the SOFI stock price according to analysts, as well as the recent short interest in the stock, which could potentially cause a short squeeze, which would absolutely ignite the SOFI stock price, causing it to surge upwards. Lastly, we're going to be going over their projections for their earnings per share or EPS to determine when SoFi Technologies is going to become a profitable company, which again is going to act as a fantastic catalyst, which is going to send the SoFi stock price absolutely surging upward in price, which is great news for investors. We're going to be looking at three various projections for Q2 of 2022 and when the company is supposed to achieve profitability. So we're going to be going over the bearish negative aspect of their earnings per share, the bullish positive earnings aspect for their EPS, as well as their neutral hold ratings from various analysts. And to do this, we're going to be looking at Jefferies Financial Group analysts. We're going to be going over what Wedbush analysts think of their earnings per share and EPS. And then lastly, we're going to consult Oppenheimer to determine when the company is going to turn profitable, which is going to cause the SOFI stock price to absolutely explode. So for more stock videos like this one on SoFi stock, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new. Without further ado, let's jump right into today's stories. So right now, the SoFi stock price has been surging, and it has jumped by around 20% because the overall stock market has also been surging upwards today. So this is a very bullish day for the overall stock market. However, it begs the question, is this positive trend going to continue with minor pullbacks, or is this just a bounce where the stock prices of the overall stock market and the SoFi stock price increase for a short time just to fall even lower later on? So let's see the evidence that this author actually has for us pertaining to that very question. But first, I want to go over their latest price targets. Right now, the SOFI stock price is trading at around $6.70, while the low-end 12-month analyst price target is $7. So even though $7 is rather low in my opinion, it is still higher than the stock's current price, which could indicate that right now is a good buying opportunity for the company. The average price consensus among analysts is $11.47, while the high-end bullish price prediction goes as high as $22 per share, literally allowing investors to triple their money in the span of just 12 months, which are phenomenal gains which will beat the overall stock market and indices. Currently, 13 industry professionals have stock price targets for the company, with 7 of these analysts saying to buy the stock and 6 of these analysts saying just to hold the company, while none of these analysts are advocating to actually sell SoFi stock, which is phenomenal news. Clearly, we are seeing some strength in the SoFi stock price as well as the overall stock market right now. However, is this going to be temporary? Because if we look at the overall stock market sentiment, it looks like this positive news is going to deteriorate and the stock price is going to fall lower for the SOFI stock price as well as the overall stock market. So let's see the evidence that this author has for us pertaining to that very question. He says that the SOFI stock price has fallen by around 19% in the last few weeks, which is definitely correct, and the reason for the stock price falling is either due to the anticipation or even aftermath of their first quarter earnings report for 2022. And I have an analysis video on this very earnings report, and honestly it was pretty positive, and it in no way justifies a 19 to 20% drop. So because the SOFI stock price dropped unjustly and it has recently surged, does that mean that the stock price is not going to fall anymore, which means that the stock is going to increase in price from here on out with just minor pullbacks? Well, what is the evidence that says that the stock has actually bottomed out and will not fall anymore? Well, the author says from a technical analysis perspective and standpoint, there is no such evidence that a reversal has actually taken place right now. Right now, the stock market is extremely negative and and bearish, and it's really hitting hard particular companies such as SPACs, which are special purpose acquisition companies, unprofitable technology companies, as well as growth stocks. And SoFi Technologies literally fits into every single one of these categories. If you're already overexposed to SoFi Technologies, you're done. Move on to another growth stock and just keep your eyes out for the latest news regarding SoFi Technologies. If you're planning to hold the company for the long term, then that is fantastic news because the company is set to become profitable in 2024, which is going to act as a phenomenal catalyst. So the author says that right now you have two choices. He says that you can either buy now, hoping that the SoFi stock price has truly found a bottom and will not go lower than this bottom, and it will trend upwards with minor pullbacks along the way, but overall it's going to make a phenomenal recovery. That's option one of buying right now. Option two is not buying right now and not anticipating that the company has found a bottom until we get confirmation. And the confirmation would be it breaking above its former resistance levels, which currently sits at around $7, give or take a few cents here or there. And for waiting for the stock to actually give us confirmation, we are spending opportunity cost, because right now the current stock price is trading between $5 and $7. However, if you're going to wait for confirmation, you risk not investing into the company unless the stock price is over $7, because that's when confirmation comes in. So you can either risk it right now and think that the company found a bottom, even though it could technically continue to fall lower, or you could wait for confirmation. Clearly, in my personal opinion, I personally would rather wait for confirmation because that is the safest thing to do. However, if you're going to plan on holding this company for the long term and you are not already overexposed to this company, which means that this company doesn't make over 5% of your portfolio because that would be improper risk management, then holding this company for the long term and buying it for as cheap as possible is going to be your best long-term bet because the company is headed toward profitability. So let's actually look at the stock price chart. So clearly we have been faked out with multiple bottoms before. On screen I can see 1, 2, 3, 4, and 5 potential bottoms. Clearly these were bounces because the stock bottomed out and then it increased in price just to fall lower again. Then it hits a bottom, increases in price just to fall lower again. It hits a bottom, increases in price, and then falls even lower. And that is going to be the absolute worst case scenario for buying the stock right now, because clearly it has trended downward. We saw some recent strength in the stock. However, considering the historical technical analysis, unless it breaks above the 50-day moving average, then it has not broken above its resistance level from a technical analysis standpoint. Now, if it did bottom out, we would already know this because either the company would have created a double bottom or an inverted head and shoulders pattern or even a V-shaped run-up recovery. However, we have not seen any of these in the stock price as of right now, which is why it might be best to invest after the stock breaks through its 50-day moving average, or at least until it breaks above $7.20 on the safe side. However, like I said earlier, if you are not overexposed to the company, or you are looking into make an initial investment into this stock, then buying right now could be your best bet, especially if you're going to hold this company until the company becomes profitable, which is going to be absolutely phenomenal. Now we're going to talk about a catalyst that could cause a reversal, which is going to be a short squeeze due to the crazy amount of high short interest that we are seeing in the SoFi stock price. So the SoFi stock price literally has increased their short interest by around 4.9% since we last reported on their short interest. Right now, around 141.71 million shares are being shorted, which means that the company has a short interest of around 22.48% of all of their regular shares that are available for trading, which is absolutely crazy. That is a very high short interest, and a short squeeze is definitely possible for this stock. Also, according to Benzinga, we know that this would take around 2.3 days for these shorts to actually cover their positions. Now, if you don't know what short interest is, I will literally just let this Benzinga article define it for you because they actually define this more succinctly than I could. And it says that short interest is the number of shares that have been sold short but have not yet been covered or closed out. Short selling is when a trader sells shares of a company they do not own, with the hope that the price will fall. Traders make money from short selling if the price of the stock falls and they lose if it rises. So basically, shorting a company, in essence, is when you are betting through an options contract that the stock price is going to fall. If the stock price does end up falling, you are going to make money off of that options contract. Or if the stock price ends up increasing, this is going to be very bad for shorts because this is going to either force them to cover or buy SoFi stock, which is going to increase the price, thus causing a short squeeze, and a short squeeze causes the stock to actually increase in price, which is even worse for the people that are still shorting the company. So with such high short interest, this is clearly possible that this catalyst could indeed cause a fantastic reversal for this overall company. However, we should compare SoFi Technologies' short interest to its peers and its competition in their respected industry and sector. So according to Benzinga Pro, SoFi Technologies actually has a large amount of short interest which outpaces its peers, because on average their peers and competition only has a short interest of around 7%, while SoFi Technologies has a short interest of around 22% right now, which is extremely high, which puts this company in the crosshairs of a short squeeze, which would be fantastic for long-term holders as well as SoFi Technologies investors in general. And that could truly cause a reversal in the SoFi stock price, which would clearly cause the stock price to explode, thus giving us confirmation that a reversal in the stock price has taken place to where now the stock price is going to start to uptrend. So now let's look at their earnings per share, because another catalyst that is going to be very advantageous for the SoFi stock price is their earnings. And particularly, we are going to do this on a non-GAAP basis for their EPS or earnings per share. And we're going to look at the negative aspect of this, the positive aspect of this, as well as the neutral aspect of this, so you can gain information from all sides of the investing and financial spectrum so you can make a proper investment decision based off of all of this information. So we're going to start with the bearish negative side, where Jefferies Financial Group and Jefferies analysts say that the EPS is going to be rather negative for Q2 of 2022. They think it's going to be so negative, in fact, that they actually changed their projections to be more negative. Originally, they anticipated a loss of around 11 cents per share, also known as their EPS for Q2 of 2022, but they have since increased that to a loss of 13 cents per share. So this is very negative and bad news for SoFi stockholders. But now let's look over at another institution that is more neutral, and of course we're going to be going over the same metric for earnings per share for their Q2 of 2022, and this information is going to be coming from another prestigious institution such as Wedbush. So Wedbush analysts actually anticipate a loss of 12 cents per share instead of a loss of 13 cents per share. And although this is only a difference of 1 cent, this is per share, and there are millions of shares, so this is actually a lot of money. However, this is clearly not as negative as the Jefferies analysts, so let's go over and talk about the positive news. Well, the positive news is, regardless of their short-term or current EPS projections or forecasts, let's see what the company is going to bring in once they become profitable in as soon as 2024. So I personally believe, and I have projected in multiple videos mathematically, that the company should achieve profitability by the end of 2024. And Oppenheimer, which is another very prestigious institution, agrees with this, because for the full year of 2024, SoFi Technologies is set to bring in 9 cents per share on the positive side, which is absolutely phenomenal. And they actually increased this, because originally for the full year of 2022, when they become profitable, it is set that they are only going to bring in 7 cents for the full year per share for their earnings. However, this is then changed to 9 cents, which is a very positive development. And for this year, this particular analyst from Oppenheimer has an outperform rating on SoFi Technologies, and he says that the stock's price target is $13, which is substantially higher than what the stock price is currently trading at. So this is extremely bullish positive news for the overall company. So it's really good to see how top-tier analysts and institutions are still very bullish and positive about SoFi Technologies, regardless about their Q2 earnings report, and regardless if the company has or has not found a bottom, despite their high amount of short interest. So overall, I would say this is fantastic news for SoFi Technologies. The company is still fundamentally and financially strong, and it doesn't matter if the stock price is going to continue to fall or not in the short term, because the long-term projections of this company are extremely positive. So I would love to hear your thoughts about this company. Comment down below your personal price targets for the SoFi stock in the next 12 months. Subscribe if you are new, and I will see you in the next YT video.